Hello, everyone. Welcome back to the rationalinvestor.com's Broiler Chicken Show. Back, 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 back. Back. Woohoo, Mr. Beamish is currently in makeup and wardrobe. Yeah, well, gotta look pretty for you guys. Actually, I didn't even shave, so I'm looking a little splotchy. But, the hair, geez, it's going by the day. It is what it is. But when it looks dirty, it looks really bad. So I thought, what the hell? Might as well. And I got to look pretty for the boy anyway. So might as well kill two birds with one stone. Anyway, here we are. It's about 10:37 on the wet coast. There's Naja says, hey, Robin Hood. Do I look like Robin Hood? Maybe. Actually, I was up there in Robin Hood land. Actually, I even took some pictures with well, anyway, he's an ape. We'll leave it at that. Oh, there he is. So that's what you're making reference to, as there's stoned ape. There he is. Yeah, actually, I think I don't know whether I have pictures on my cell phone. Anyway. Welcome back to the party. Is that our Nadia from the trip? Our German Delira. Geez, I've been thinking about that a lot. I hope you're enjoying the level 1 program. Where is it? I don't see. We got one of the Doobie Brothers. You want to say hello, Mr. Doobie Brother?
Oh, if we're gonna reference me as a Doobie Brother, then sure. Hello, everyone. I like this.
And Martin over there. And where's the third? Where's the Three Musketeers? The Schmetterlings, yes. Oh, goodness, that was a lot of fun. He's in Mallorca. Oh wow, I don't know where that is. Anyway, okay. So welcome to the show, and I'm just sitting here reading the chats and the various. I think I got like 3 different chat rooms going here. So trying to keep on top of this. I think actually there's also a Zoom chat room around here somewhere as well. I wonder where that one is. Welcome back to the Frivolity. Suppose we'll spend maybe a good hour or two hashing stuff out. I did want to make reference on like when I used to be a commodities broker, I used to have this 1980s web page, and it tracked what I called the weekly commodity trend survey. And it was nothing more than, how do you describe it? Just an overview of moving averages and basic structural comment off of weekly charts. I wanted to get back into the habit of producing that on a regular basis, because there probably was no easier way to be able to manage what's going on in the market and to have clear expectations of what's going on in the market, unless you do one of those sort of weekly commodity trend survey kind of reviews. And then it sort of puts everything into perspective. There's the chat room there. Oh, hey, Paul J's here. Paul J, man, he's been ripping it up. Is that our Paul J from the weekly crypto show on Wednesdays? I think that's the same Paul. Yep, there he is. So anyway, welcome. Doing a fantastic job just trading setups. And I swear the best, absolute best advertisement I could possibly have for TRI is when Paul just says, look, just trade your setups. Nothing else matters. Just get in there, hunt location, indicator confirmation, price structure, go, live with the results. And you can tune in every single Wednesday. In fact, I should probably show you that page. Here is the YouTube page. And this is that Wednesday show that I referred to. you can see we have about, roughly around 500-600 views a week. And Paul, who I was just making reference to, he's my co-host along with Ben. And actually, the three of us have a really cool little team. And I think the offering that we give on a weekly basis is really cool. As always, and of course, if you are watching, Nick and Derek and stuff, you guys are always welcome back to come back on the show if you want to have a little guest spot. I did find it interesting that about a year or so ago, Nick kind of politely bowed out. And he just simply said, I want to come back when the market is in easy mode. And frankly speaking, I think that was a pretty darn good decision for those people that, were busy with their own careers. And I think, if I'm not mistaken, Nick was building a house. Busy raising the kids. You can't stare at a computer screen 24/7 like nutsos like Brian. I think that concept of what Nick said, I hate to say it, I think it's pretty accurate. Unfortunately, we get into these blow off phases in things like cryptocurrencies, but you could argue the whole market unto itself. The Fed, of course, just throwing money at the market whenever their sort of monetary policy is loose. Well, usually risk assets go mooning. And unfortunately, when their monetary policy is tight, a lot of these risk assets all come back down to earth. Guess what part of the cycle we're in right now? And, I was actually listening to one gentleman this morning. We were kind of commenting on the consensus in the market is that this is a risk-off market, right? And, one thing I would strongly suggest all of you do, excuse me, is, I think I have it here. Like I said, on a weekly basis, I do these weekly commodity trend survey. And I want to try and get this down to a little bit more manageable of a time. And if I understand correctly, Rumble penalizes you if you do these marathon videos. So if anything, it's probably better that they make the video quality a lot worse. So I sort of, I corralled myself to try and make sure the video was under an hour. And I think somebody said that the video quality is a little bit better, at least to the point where you can read the numbers on the screen. But I basically looked at the currency markets yesterday, and I would strongly suggest, if you are interested, to pop on over to this channel. I asked Chris if he could tweet this out onto the TRI channel. There it is on my channel, but I don't like to influence sort of TRI's marketing department. Oh yeah, good. There it is. So what I would just simply say is, if you want a 64,000 foot view of the market, and what is trending higher, what is trending lower, and what markets you should be interested in, I'm going to make it a habit to do these on Saturdays. In about an hour, I covered all the currencies. So what do I mean by currencies? Ironically enough, I think you could actually incorporate Bitcoin into that category now. Let's see, where did I have that? Over here. Nope, that's not it. Oh, I had to reboot the darn browser. No fudge. So is everything all messed up? Oh, it is. Oh, you jerks. All right. Anyway. Okay, I have to figure out what the hell. I think it's this one. So currencies, of course, specifically the US dollar. And what I like to do is just actually look at a weekly chart. So something like that, US dollar index. I mean, the irony of it all is that this is in hindsight. So you kind of go, US dollar is trending higher. Oh, what a shock. Really? But hopefully, you guys have been around TRI long enough now. You see this very well-defined W down here. So ironically enough, I think you could make the argument that we all should have known that the US dollar index was trending higher here. And more importantly, like risk on, risk off, this is a very large risk off bet. When we get to the end of this coming cycle, you'll find that the US dollar is bullish and it's trending higher. And that will actually be a validation of the greed part of the cycle. Since we're now coming out of the fear cycle, generally speaking, because of the way the world is constructed, this US dollar hegemony kind of system, you can literally think of this US dollar index as if it's expanding and it's going up like this, then it actually means that the demand for US dollars themselves is increasing. And more importantly, the demand for international risk assets themselves is decreasing, or the demand for global assets is decreasing. You could also, tie in the demand for risk taking is decreasing. As people say, come out of third world bonds, come out of course, equity instruments, come out of commodities, and just simply park their money in UST bills. Ironically enough, we'll know that this trend is over when the market actually shows us that demand for these sort of safer assets, if you will, and people wanting to take risk, when that actually starts to abate, and then more importantly, in this current environment, when the inflationary pressures start to abate. And that's basically this image. I think it's important that people understand, like you're hearing a lot of like out of the United Nations, and keep in mind, most people that work in the United Nations don't really understand how economies work and how this fiat currency system works and all that kind of fun stuff. So one thing you cannot have happen in this fiat currency system is runaway inflation, because then that just undermines the whole system. The whole system just starts to unwind with runaway inflation. So ironically enough, the true irony of it all is that we actually just went through a very deflationary part of the cycle here at the end of this baby boomer generation. We're now, unfortunately, you don't really see it on this image. I could show you probably other images that show it better. But we're now actually, this is falling interest rates. This is a money market instruments. The orange line is like the market-based rates, and the blue line is this, Fed funds futures, which is nothing more than the banking cartels sort of guaranteeing the market, because sadly the United States government cannot guarantee the market anymore. Technically, all these Western nations are all bankrupt. So that's why we have to use these Fed fund futures now. Anyway, and of course, keep in mind that they'll only guarantee part of the market that they absolutely need to guarantee. Do you think they really care about your car loan? They couldn't care. In the United Nations, people in third world countries that are running egregious debts, and they have horrible fiscal policies, like the substitute drama teacher in my country. Do you think the Fed cares about that person? They don't give a crap about him. And he's probably going to be reminded over the next few years that money actually costs something. So anyway, the point of the matter here is, a lot of people in the sort of the public space actually believe that governments are bigger than markets. And unfortunately, I think, that's a brutal reality that a lot of socialists have to learn. We happen to have been in a very low interest rate environment, a part of this cycle. All these things move in big circles. So a big part of the cycle that was the low interest rate environment, and a lot of sort of MMT people believe that that's normal. but it's not. All of this crap moves in these damn circles. So we've, 1980, 81, when I sort of first came online, if you will, there was double-digit interest rates. And ironically enough, I mean, through all this deficit spending and nobody ever pays any bills anymore, it seems. Well, we're probably going to go back to double-digit interest rates. I don't see any reason why not. In fact, if you actually look at some of the interest rate proxies, it's quite dramatic what's happened. Here are the various different interest rate vehicles. These are what they call bonds. And, if anything, it's probably encouraging that the short end of the curve is flattening out. But you tell me, if price of bonds goes down, which way is interest rates going? Interest rates are going up. So you tell me, does it look like there are any W's anywhere in sight here? I hate to say it, but this looks like this trend's just getting going, not coming to an end. So ironically enough, we actually have to start getting used to higher interest rates over the long term, not lower interest rates. And that's, I think it could very easily bankrupt a lot of third world nations. Be interesting to see how a country like Canada fares through this. It should get like the stupidity of the fiscal policy through the sickness. In hindsight, they will say, well, our society was going through a sickness, and we had to do whatever it took, and actually Mr. Substitute Drama Teacher goes, well, what would you have us do? Right, kind of thing. And so playing on sort of, human empathy. And I think because of the sickness, I think that's the one reason why the banksters sort of said, okay, fine, we'll let you be. But unfortunately, what would you have us do? Basically everybody in the country goes on welfare and gets handed out free money. Is that sustainable over time? I mean, come on. So if anything, you should expect, or not expect, you should say, well, it makes perfect sense why interest rates and now inflation are going crazy, because these governments just went and acted incredibly fiscally irresponsible. Now, as I said there a moment ago, you can play the sickness card, and most politicians will play the sickness card and will say, well, what are you, some ruthless, uncaring capitalist that you're not going to look out for your fellow man while the sickness was taking over? But could you argue that, the Great Reset and Klaus, and they knew that all of this had to happen in the hyperinflation of our money supply to make the next sort of generation of unending lending go and work? Did we get played to a certain degree through that sickness? I'll let you answer that. Of course, obviously, those are very contentious questions, and you're kicking the hornet's nest when you start doing that, especially with the Google algorithms and analytics and all that crap. Actually, the purpose of these shows is really to speak to the level 1 course people. And this is actually a big part of their current week. This is an extremely difficult part of the education program. I know I was making reference to Paul there earlier, and he said in his Wednesday class, everybody who I sent to TRI, you've got to work your butt off. This is called eating your vegetables, and it's no fun. But you have to understand how these damn economies work, and the fugazi of it all. So, an illustration of this conversation, I actually like to follow the tips versus the TLTs. So all you level 1ers, this is a really good proxy for what the market thinks inflation situation is. And of course, there was the insurrection and all that nonsense. Fascinating how the mortgage market, and also too, what's really interesting about all this is that there was a big Jupiter-Saturn cross in the skies. And ironically enough, I've had people actually ask me in the past, well, Brian, what's going on? Why would interest rates go from trending lower to now all of a sudden mysteriously out of nowhere trending higher? Like, what happened? And I literally will say to them, I'll say, look, I'll tell you, but you're going to laugh at me and you're going to think I'm a nut job when I tell you what I think the reason was. And so, it's so frustrating to try and talk to the public. I mean, I honestly believe that the interest rate cycle is directly related to the Jupiter-Saturn celestial events. That both are crosses and oppositions. I mean, the financial crisis basically happened on an opposition. The last conjunct before this was the dot-com top. Before that, the previous one was, 87, 88 was supposed to be, anyway, I don't want to go off down that tangent. The point of the matter here is Jupiter-Saturn cross, just ridiculously significant events for us silly humans. What's really interesting about this study, hopefully you can see, is that our little TIPS TLT relationship, and TIP stands for Treasury Inflation Protected Instruments, and TLT, that's just the name for the government bond, US 20-year, I think it's average 20-year government bond ETF. So when they're trending down, and the easiest way for you to understand trends is M's and W's. You see M, another big M, 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 just no W's here at all. Then finally, right there in the May of 2020, and interestingly enough, right, that was right in March, April, right? That was the panic low of the sickness. And most of the time we humans act fiscally responsible. But through this dump, I don't know whether you remember, there was one US Republican politician who wanted the government to just debate, not necessarily shoot down a big government stimulus bailout package for the government, but just simply to debate it. Because in essence, I mean, you've all seen what the money supply has done. Don't kid yourself. These central planners and my fucking substitute drama teacher here in Canada, he has literally gone and destroyed the Canadian balance sheet, absolutely driven a truck through it. And I would say the exact same thing for basically all of Western civilization. When you do something like M2 money supply, this is the definition, if there ever was one, of just simply driving a truck right through your economy and completely everything, like what pisses you off is in years gone by, they would talk about things like, oh, demand destruction, and we want to maintain the integrity of the marketplace. Well, I can tell you unequivocally that image right there is basically them shitting on the integrity of our society. We have no integrity whatsoever. And you ask why we have all this price inflation. Well, you can't just go and endlessly print currency and just assume that it's not going to have an effect. And this is probably the best example here, right? So this is going parabolic. And the worst part about these parabolic curves is they say, well, just change that to a log scale. And then you see that actually it's a very consistent growth rate. And unfortunately, what that means is, okay, this week a loaf of bread was $1, then it goes to $2 because it's doubling in price. Well, then that $2 goes to $4, doubling in price. That $4 goes to $8, doubling in price. That $8 goes to $16, doubling in price. Soon you're fucking talking, my $1 loaf of bread now is $32. How the hell did that happen? And literally entire societies are destroyed because of this price inflation. And I would argue that it started with quantitative easing. And the problem, of course, is that the banksters stayed on top of it, because if they had just started quantitative easing back in 2009, 10, 11, 12, blah, 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 and just done what they're doing now, well, we're not going to put the assets on the balance sheet. We're just going to float them in the marketplace. This price inflation, the hyperinflation that went, it would have happened instantly. And people would have gone, Ben Bernanke, this is a total disaster. What have you done to us? This is a horrible policy. No, but because these banksters moved all the assets over to this side balance sheet, and we're just not going to mention it. It's just over there. And now all of a sudden, now they're getting religion. And okay, well, we're going to unwind that and we're going to just let the market operate normally. Here comes your price inflation. So, did we just have an absolute con job all pulled over on us? I think so. And what's really scary about this is that democratically elected politicians, you love them. I mean, they're substitute drama teachers. Does a substitute drama teacher really understand trading? Does it understand economics? I mean, come on. I mean, the little girl that we have running the Canadian finance department right now, she has no experience in the financial services industry at all. And she's supposed to be smart enough to run. Oh, and by the way, she's also the deputy prime minister of the country. I mean, what the cats and dogs living together? Talk about just an absolute woke train wreck here. Anyway, and the irony of it all is that this plays beautifully into the banksters' original purposes. Right? Just remember Mr. Rothschild. Mr. Rothschild, and actually it was one of his 5 sons. What Mr. Rothschild famously said that he didn't really care whether I have a fascist dictator, and so you're going to lend him tons of money to go and build tanks and invade other countries. Do we see that happening somewhere in the world right now? Or whether it be, your leftist woke politicians where everybody identifies themselves as houseplants and you're not even allowed to have a personal identity anymore. And what ends up happening is you get this sort of collective decision to go and blow up your society and spend money that you don't have. Either way, the banksters win. And that's the worst part about all this, is that this is exactly what the banksters want. And the worst part about it is the banksters don't care about national identity. It doesn't mean anything. It doesn't mean anything. So are they happy with watching nations rise and fall and the standard of livings of the respective countries rise and fall? Do they really care? And I would say no, they don't. So anyway, there's a nice big fat rant to start today's offering for you. Anyway, moving on. Let's see. Somebody said something over there. Let's just wait till you see the health ministers of these developed nations. Okay. Miguel says, is it too much to ask for someone not even competent but qualified for the job? Sigh. Is that me, the commentator? Maybe I'm not very competent. That's true. Or are you talking about these government ministers? Miguel says, I was your driver for a short time. You were? I can't picture you, Miguel. About the ministers. Yeah, so DMAX says here there's and somebody was mentioning that earlier. There's 43 people in the video here, and there's 25 likes. So then we just went up one, but we haven't gone up likes. In fact, what used to piss me off about this thing is I used to watch like the dislikes start to go up, and that used to drive me crazy. Hey, there they go. The likes are going up now. But there used to be guys on the site, and I used to have one buddy of mine, and I feel so sad about how my relationships here in Vancouver have gone, but I guess it was meant to be. Anyway, I had one buddy of mine here. He was kind of a fun guy on the site, Shane, and he used to always hit the dislike button just to see if he could trigger me. So anyway, frankly speaking, by the end of this this respective greed cycle, I'd be very interested to see whether the Eurozone can even last. Because no, that's a different Australian. Actually, he was Canadian, and he lives in a van. And it's so sad. He was going to go live the sort of van life. And now, if I understand correctly, he lives in a van and he's working as an electrician in Toronto, of all places. Boo. Oh, well, I guess that dream didn't get very far. Anyway. All right. So I was just popping over there onto the YouTube page to see if there were any questions. Looks like we're just chitter chattering. So please understand the actual purpose of these Sunday calls, this Broiler Chicken show. Unfortunately, Brian ends up ranting. If anything, one of the reasons why I did the weekly commodity trend survey is if you want sort of that overview of the market, go check that out. If you want a really good conversation about crypto, and from TRI's crypto community and various different site members and Brian, please tune into the crypto show, and then they're weekly, so you got lots of good information there. We'd love to, of course, have you on the site. So we do have, on the site itself, we have a 30-day trial. You want to come in and kick the tires a little bit. I suppose where I was going with that whole sort of intro, I want to, just be aware that I am doing this. But, when we actually look, this is sort of the computer automated version of the weekly commodity trend survey. Most of these proxies are stock market proxies. They're not actual futures products, whereas this is actually just looking strictly at the futures market. So, anywhere along here, it's probably take 10 minutes to load up. But, basically it's a talk about all of these markets. So, these are all futures contracts. There we are. All right. So you can see, what was I talking about then? Oh, I was talking about the US dollar index. So anyway, so today's call, also too, FYI, I included Bitcoin and Ethereum in that conversation. I'll going forward, I'll include them in the currencies part of the weekly commodity trend survey. And I mean, I don't really need to, rehash this. It's pretty straightforward. You can watch the video, but the trend is down. And the trend won't be finished going down until we actually have moving average crosses back bullishly again. And I wouldn't be surprised if it actually has to look something like this over here. So it's not like we're missing a huge bull market here. The trend is down, and it will be down probably for the next little while. So I mean, it kind of sucks, but that's just the way it is. Ethereum as well, sort of as a junior proxy in the space, same sort of thing. The trend is down. We just put in a new M here, so I would expect price to move lower. We also have a bear ABCD in this particular case that has not been hit yet, so I could very easily see a bit further lower on both of those. In fact, if I do the ABCD on Bitcoin, I think it gives you a pretty good idea where we need to go. Boom, boom. Boom, boom. So you can see right down to this area. And I really like this 88.6 fib, because you notice, I actually did a tweet out earlier today where I kind of quizzed people. Is this the right? Maybe this is, no, this is not where it is over here. That this is kind of what I see in the marketplace. It looks like the market put in quite a well-defined inverted head and shoulders here, which set the stage. Of course, your halving event was all through here, right? And we all got fucking stinking rich. Market goes zooming out. But it almost feels like we went and put in this head and shoulders top. And I do find it fascinating that this head and shoulder stop seems to be projecting down into this original neckline. So I'm almost thinking that this almost looks like a bit of a seesaw. So this is one side of the seesaw. This is the other side of the seesaw. And we're just going back and forth, back and forth. Call it a fulcrum. I don't know. But that's what I'm seeing right now. And I think that this is sort of the balance of power event. And if you look at the way that the U.S. politics and stuff evolved, right? This is your health crisis here. And, shouldn't we debate mortgaging our future? Shut the fuck up. Just give them the money, right? That was all this. And really, this is actually what J.R. Powell wanted was, and he said this repeatedly, that he just wanted the market back to the levels that it was before the shit hit the fan there in the end of 2019, beginning of 2020. That was basically in this area here. So, if you look at the stock market, that's this level right here, right? It was fascinating was that this was a massive transfer of wealth from through the options market. It was a ridiculous amount of options stock completely. The 1% sold and the public bought. It was so sad. So you see what happened. Kaboom! And of course, this is when should we debate mortgaging our future? This is the big government bailout, right? Which stopped the slide. I think these guys were actually looking for this to go much, much further. But as soon as basically giving free money out to everybody and take interest rates to zero, that's your sign that the stock market's going to go crazy. And that's exactly what happened. The stock market went crazy. But it was through here. This is where Granny went all fucking crazy about her Build Back Better bullshit. You remember that? And like all the woke politicians, the Cortez, doofus. And of course, like my idiot substitute drama teacher. Hey, we can spend all the money we want. And down in the States, they rammed through this huge spending program that even when they were doing it, Powell was like, I can't comment on that. Yes, we absolutely desperately needed money here. And he was saying, we better do something. They rammed through that extra spending program here, that Build Back Better. And they didn't even get as much as they wanted. They wanted even more. They wanted it like 2 or 3 times the size of the spending plan that they did get. But still, nonetheless, this created what I would actually call the bullshit economy right there. This was this, and who was really popular in through all this? Like that the barstool guys. Where are all those barstool fucking brilliant stock pickers and stuff? Remember the guy who used to have that silly little hammer. What the hell was his name? Chris, do you know what I'm talking about? What's his name? Sorry. Portney. Yeah, that sounds about right. Yeah. And Wall Street bets and all that kind of nonsense, right? So, they go and they end up spewing out all this bullshit and stuff and just, all that. Yeah. In years gone by, I would get more colorful with the pictures, but I'll leave it at that. I gotta grow up. Where's Colleen when you need her, right? Anyway, so I believe that Mr. Powell is just going to do nothing more than he's just going to take back the bullshit economy. He publicly said this is exactly where he wanted the market. And through all of his stimulus and taking interest rates to zero, he just wanted the market back to where it was pre-crisis. And all of this is all your inflation bullshit world that we're living in right now. And frankly speaking, it should be taken back. This is garbage. I mean, I hate to say it, but this was the type of environment that Luna story could thrive in. And all the, all the crazy scandals in DeFi and stuff. And of course, there's that jerk who bid up Dogecoin to absolutely ridiculous levels, right? That's that kind of environment. That should have never happened. Anyway, blah, blah, blah. Brian, the stoogey old barker of a stooge. Anyway, it was interesting. Somebody on the site was painting this as a reload zone and said, Brian, well, why did this not work here? And actually, I don't think this is an accurate reload zone. I would actually just go right off of that low. And then you notice that actually your reload zone is right in here. And you see that actually most of the people in Wall Street that are in the stock market, and this is what really kills you, they're not long up here. They are not. Who was it that was buying up there? That unfortunately was Joe Sixpack. That's the bar stool guys. That's the lunatics, right? And those doofuses. And if anything, I might argue, you want to know where the smart money is long this stock market, you can see it's right there. That's where they're all long. And what a surprise, your reload zone is basically right in that area. So really, I don't see any reason why we can't do something like that. Unfortunately, this stuff never moves in a straight line. We are in a tough time of year. So I wouldn't be surprised, especially into this election, there's going to be some effery here. But coming out of the election and into the end of the year, I actually expect a pretty sizable rally. But I also fully expect that once we head into 23 in earnest, we have to come back down. And keep in mind, this is basically where Mr. Powell wants the market anyway. So an interesting 64,000 foot view of the stock market. But also too, what I would say is, if you follow TRI PMA, I think Josh really liked this, and actually he created like mouse pads and notepads and stuff with this. So check out the merch store if you want this kind of stuff, because this is invaluable. In fact, there was somebody who actually even posted a tweet. It was so cool that they got their mug, and this mug, look at this mug. You can learn how to trade just using this mug. Look at that. That's crazy. I mean, I don't know their focus, but look at that. Every single thing that we teach in the level 1 course is right on that goddamn mug right there. Holy crap. That should be like a collector's item, I tell you. That like having something like this 100 years from now, that would be, oh my God, that would be so invaluable. The one thing that we're missing, Josh, is I don't see a TRI logo. Do you see a TRI logo on that thing? We got to get a TRI logo on there somewhere. But damn, that is fucking cool. So anyway, the mug, along with the mouse pad that has the Benner cycle on it, I mean, you could see we're not supposed to expect a bottom until 23 anyway. So not a big surprise what's going on here. So back to our little S&P 500. This is exactly what's supposed to happen in 23. And this is what I find really fascinating. Check this out. And I've shown you this before, but just check this out anyway. It just blows me away when I see this. Let's see, how are we going to do this? I think it's this one. It's one of these. No, you know what? I think it's actually up here. Let's try this one. Oops. Something didn't work there. Let's try that again. Let's see what we got here. All right. Now this I find fascinating because this is pretty much what I would expect our growth cycle. And of course, this is speaking directly to our level 1ers. My teaching for you guys is just simply, we as a society, we move demographically through our economies. And if you can just think of, just don't overthink this. Keep this as simple as possible. When you're in your youth, you don't get paid a heck of a lot of money. When you're in your 40s, 50s, 60s, you get paid more money. So if you have gluts of the population that are moving through their life cycles, well, you can pretty much determine when an economy is going to be making lots of money, when economy is not going to be making so much money. And right now we're in one of those transitions where this is basically, these are the generations of I guess the 20th century. So this was basically the generation that was born following the US Civil War. And the Gilded Age in the United States, as they were sort of growing up and coming into their adulthood, their sort of respective greed cycle and their respective fear cycle, them entering the economy growing dramatically, hitting an apex, then the economy unwinding as they left the economy. Then the next cycle is basically their kids or the people that had to fight the Second World War, right? Second World War is right in there. So they came back after the Second World War. They're going through their life cycle, earning more and more and more money, hitting the peak of sort of their earnings years, and then them transitioning into retirement and moving out of the economy. Right. And basically it's just fear, greed, just keeps going back and forth, back and forth. Nothing ever really changes here. I mean, that's the irony of all this. So this is the George Bush seniors. Think of those kind of people. Then the next economy, right? Think of George Bush Jr. and his whole cronies. So the baby boomers, right? Them entering the workforce, economy very weak, them going through their life cycle. And as they hit their sort of peak earnings years, the economy's booming. Interestingly enough, we actually changed the rules here, where back in this world, the government, the US government in particular, and US society in particular, valued a strong currency. And frankly speaking, your country is as strong as your currency is. If your currency is weak, your country is weak. It's just that simple. I mean, that's really the reason why the Soviet Union collapsed, was their purchasing power of the Soviet Union's currency became worthless, and it still is. I mean, and of course, Mr. Putin's trying to change that, but we won't open up that can of worms. But basically, it's worthless. And unfortunately, it's the end of a commodity cycle for them. So it's going to get even worse over the next 10, 15 years. But the point here is that at this point here, and all you level oneers, please understand this. I'm speaking directly to you. You need to understand this. That the banksters did not control the US society back here. And you could make the argument from Old Hickory, who actually kicked the banksters right out of government and can basically dissolve central banks. Then Lincoln, who basically went to war with the international banking cartel. And you could argue that the international banking cartel was actually the people who wanted to destroy the United States of America through their civil war. And that failed. So as a result, the international banking cartel got kicked out. And by 1913, the international banking cartel, through this respective cycle, convinced the American politicians that were, dominating American society at that point, that it was okay for the central bankers to come in. Woodrow Wilson was the US president, a Democrat. What a surprise. Think of sort of socialism and the socialist movement. They often get suckered in by the banksters because, while populist sort of policies are prevalent, the 1% just rapes the public, and the public, through these greed cycles, dot-commers got stinking rich. And in this particular case, it was the nifty 50 folks. Through this part, the fear cycle, as the generations leaving the economy, of course, the populists sort of the economy is not doing that well. So if this is a democratically elected government, then the democratically elected officials become more sort of empathetic to how hard and how tough life is. I think you could make the argument that Wilson kind of got sucked into this sort of new age banking thesis, but it really was the same old bullshit that the Rothschilds have been spouting for the past 500 years. Give us, the banksters, control of the money supply, and we'll take care of everything. The only problem with that is, are the banksters working on your and ours best interests? Citizens of the country. Do the banksters care about the actual standard of living of a country? And I would answer unequivocally no. The only thing banksters care about is making sure that the system just keeps going. So if a huge part of the system is based purely on lending, then they are going to do whatever they have to do to make sure that lending continues. And if that means every 80 years they've got to quote unquote hit the reset button, thank you, Klaus, right? Or whether it be, in this particular case, they put Germany out of business, right? And then they, and you could actually make the argument half of the reason why the Soviet Union came into existence was because the banksters wanted to put the Romanovs out of business because the Romanovs would not allow the central bank into Russia. Anyway, blah. It goes on. I mean, this is basically world history for the past 1,000 years. And really, you could argue it goes all the way back to good old JC. The only people in the Bible that you ever hear JC getting angry at are the banksters. What a surprise. Anyway. Okay, so point of the matter here is we go back and forth, back and forth. But here in 1980, and what's fascinating is that a politician by the name of Ronald Reagan came into power in the United States. And through the 1970s, and I even have it on my Twitter feed, he was vehemently opposed to big government. And he used to be the governor of the state of California. And he was, small government, don't go and borrow money. Don't spend money you don't have. Everybody work hard, right? And just save your money and pay off your debts. And then all of a sudden, pow, pow, pow. Oh, Mr. Reagan, somebody tried to murder him. And then mysteriously, Mr. Reagan's attitude all of a sudden changed. And then he became deficit spend all you want. And, then they started doing things like funding the Nicaraguans and stuff with missiles that they were selling to Iran. And oh my God, it just turned into an absolute shit show. So it's kind of sad how I believe the banksters actually got Reagan to change his tune by just taking a little poke at him. Let's just remind this guy who's actually in charge. So since that time, and literally there was one quarter right here in the beginning of the year 2000, one quarter where the US government actually ran a surplus. One quarter. Over how long is this? This is basically 42 years of history. One quarter, the US government ran a surplus. Deficits the entire time, even through periods when theoretically the economy should have been doing really well. No, more deficit spending. Why? Because as long as you keep building up more and more and more and more debt, the banksters basically are taking over your society. And that's what I think's happened here. And the problem now is it's too late. There's nothing you can do about it. And the banksters know this. And they're sitting there cockier as fuck. They've won. They've taken over our system. And ironically enough, it's probably just a question of time until messages like this that you hear from clowns like me will be just completely drowned out. I'll be surprised if they don't take a poke at me. Anyway, I guess what I would say here is this is basically our future in our eyes. And I mean, look at these numbers, right? You're going to have the Dow at 100,000. How does that even happen? And yet, you probably at this time, if you were sitting there, living through the Great Depression, right? And you see the Dow is, 90 points, and somebody shows you that, oh, by the middle of the 1950s, the Dow is going to be 1,000 points, or basically a tenfold increase from where it was through the darkness of the Great Depression. They would have thought you're crazy. But that's basically all this is, right? In fact, that's not even a tenfold increase. We're at what, 29,000 now, and this says we want to go to 100. That's only a fivefold increase. Hey, that's nothing. So anyway, I think the bottom line here for you guys is this is our hyperinflationary world. Get used to it. It's just the way it's going to be. If this cycle looks more like the baby boomer cycle, it should follow the yellow path. And if that's the case, you're going to see, holy crap, 269,000 on the Dow. Well, I'll just give you a nosebleed. I think that we're probably going to err more on the side of the greatest generation, but it's a mug's game predicting this. I mean, you can see at one point we were looking more yellow, and now it looks like we're looking more gray, but you can just generally see what the path is going forward. And it sure looks like we're just following along that path. Interestingly enough, if you believe in the whole sort of Benner cycle, this should have been predictable way ahead of time. And you can see there's 2021. There is the stock market peak, January of 2022. Holy crap. And you see that 2022 has just been an absolute train wreck. And really, I might argue, this has probably got to go on right through to the end of 23, a la Mr. Benner, right? There is 23 right there. Good part about it is coming out of 23, probably 24, 25 into 26, we should enjoy a nice friendly window in the market. Now, why do I mention this? Whether you invest in stocks or not, that's up to you. I don't know whether, we are now heading into this, unfortunately, this quote unquote normalizing of interest rate policy. So that's going to be like a headwind in the face of the market, right? You can see what mortgage rates, I guess it makes sense why the market has done as well as it has, is you can see that interest rates have been falling. Well, we're not in that environment anymore. So you just get used to it. That's past tense. That's not present tense. What I would expect is at some point here, we're probably just going to settle into like a nice sideways range for 4 or 5 years. I thought it was going to be when we brushed up against these highs, but you can see we just blew through that. I suppose you could make an argument if you're looking at interest rates, you might want to do something like just a simple foggy boggy here. That'll probably give you some idea of upside objectives. Yeah, so there's 2.618. Should not surprise us why we ran into traffic right in that area. And also, too, that's playing against old highs. Since we did go through 2.618, next stop should be 4.669. Oh, hello, look where we are. So that's kind of interesting. Now, do we get some back and forth here? And maybe if we're really lucky, we get, actually the Fed does say that they're going to get some religion and try and reduce the balance sheet and try and sort of stabilize things. And maybe we do actually get a top that comes in here, right? You'll know that it's a top when interest rates start smiling, or conversely, that these bond prices actually start Wing out. As soon as you start seeing the W's, then you know the carnage is over. But there ain't no W's anywhere in sight there, or there, or there. So I just got to keep on keeping on. Where was that? There, way over here. Yeah. So if we can't slow down here, where's our next stop? Oh, Jesus, all the way up here. So it'll be interesting to see. This is a conjecture of, can they hold sort of like the sort of post-dot-com boom interest rate world? Or do we actually have to start transitioning even back into that pre-dot-com boom world? I'm not going to get into the business of predicting what's going to happen here. Because frankly speaking, I don't think anybody knows. My hunch, it is something, is coming in and betting on the long side here probably isn't that good of an idea. And same sort of thing. Do you want to come in and put on a new short bet here? I don't think that's that good of an idea. Obviously, you can see exactly where you were supposed to be short from, right? All these M's up here. So anyway, what I wanted to show you was 22, 23. We expect 22, 23 to be shit anyway. What I do find interesting is, early 2024, is something supposed to happen around here in early 2024? Bitcoin, excuse me. That might mark the transition from end of shitty to, hey, let's time to party. Anyone? How about happening events? Where's our happening event? Well, actually, it's not on this screen, is it? Oh, here it is. Yeah. Look at this. This is so freaky. So, our rule is we're supposed to start buying in earnest 6 months prior to the happening event, right? Benner cycle 22, 23, shit. So, there's the stock market performance. Ugh, been horrible. There's Bitcoin. Oh, what a surprise. It looks like it topped out. Keep in mind, yellow is the 16 to 20 cycle. Blue is the 12 to 16 cycle. And red is our current 2024 cycle. Isn't that fascinating? There is that 22 reference. There is Bitcoin's top, basically the very end of 2021. And what has it done through this whole period? Jack shit. We have to get through 2023. That's what all this is, a back and forth. Right. And this was 2015. And really, I have a feeling that our market's going to look a lot like this 2015 cycle. And then, our halving event, our upcoming halving event, I think, if I'm not mistaken, is supposed to be in like April, May of 2024. And what a coincidence. Can you see if we just follow along our path, that's when we start going apeshit. And notice that will go right on into the end of 2025. Well, sort of. I think that's basically what our path looks like going forward. I mean, maybe a little bit further out. I don't know. It's a tough one, but something along those lines. Also, too, if I pull up question is, where do I have it? I think it's this one. There we go. So that's sort of what I think our current path is. And remember, there's our halving event, April 24. You notice everything. Our rule is we're supposed to start accumulating our Bitcoins 6 months prior to that halving event. So that puts us right about somewhere in that area there. Notice, I mean, well, that would have been an okay. I mean, it wouldn't have been that great of a level though in this cycle. There's your buy way down there. That was almost a perfect buy for the 12-16 cycle right there, right? Buying the breakout there. But I don't really care. Anywhere down in here, if you want to play this next halving event, I thought it's interesting how the halving event lines up so nicely with our Benner cycle thesis. And you can see what the stock market's going to do. Stock market should have a pretty good go of it. But in essence, we got to get through this 23. And I actually would make the argument that 23 should actually be your basing year. Now, a lot of technicians will tell you, it's not really our job. Probably the best way to see this is here. It's it's not really, if you're a half decent technician, your job's not really to call like this bottom part here, or even really this top part here, right? I mean, if you see the M, right, and you can see this M's up here. Well, you could even argue, there and then there, but it's not really that great. But anyway, the point here is we don't really want to get too wrapped up in these middle or sort of the bottom chunks. What you really want to do is you want to try and grab this middle part right in there. And in this one, obviously, a really good example, a big middle part there. And really even this one here, right? That middle part there, that's what you want to try and grab. So, do you like nitpick your way in here trying to pick this bottom? Or do you want to just try and sort of get long? And we'll leave this bottom 5-10% to the smart money because they're always way smarter than any of us. Right. So we'll leave that for them. But we want to try and grab this chunk here. Right. And then, we'll leave that top 10% for the smart money down the road. But we want to try and grab this in there. I don't know whether that makes sense. I probably just totally butchered that image. But hopefully you can understand where I'm going with all that. So that actually speaks to a tweet that I just put out where, ironically enough, this is the only business when stuff goes on sale, nobody wants to buy. And it, like trying to convince people to slow down when Bitcoin was like 50, 60 G's was like pulling teeth. It was ridiculous and impossible. But I would make the argument now, and this is just nothing more than a fib, taking the all-time high and just taking it right down to zero. Just saying, you know what, the range is that high all the way down to zero. There is your 61.8 to 78.6. What's really interesting about this, of course, Simon Dixon, he always tells you if Bitcoin corrects 80% of its peak high, just start buying. I mean, don't fight it, just buy. We're a little bit above that now, right? So there's 78.6, it's about 14,000. If we got like one more dump down into here, then I think you're in that zone where Bitcoin's a no-brainer buy. Remember I showed you, and this is speaking to that commodity trend survey comment that on a weekly basis, I love this bear ABCD, which takes us right down to this 88.6, takes us down to this original breakout level, takes us down to the POC. Basically, we can start filling in this profile so it looks like a square or maybe even a parabola. But the point here is you can see there's lots of unfinished business down here that needs addressing. Also, too, it brings us back down to the original weekly double bottom level. So anywhere down in this area, and this happens to be right around 12 G's, this 88.6 off of this particular range, anywhere down in this area, I like. And, I would say, I mean, it really all depends on how proactive of an investor you are. If you want to come to the school, you want to build your trading plan, you want to set yourself up, hey, I'm a killer trader. I've got my 3 reasons. I'm in there trading like a boss, like Paul. Okay, there's nothing wrong with that. And probably a good portion of the people that we're speaking to today, you are those type of people. That's cool. Come to the site, learn how to trade lower time frames, kill it. You see what Paul's doing on a weekly basis. It's magical watching him. And of course, we have tons of TRIers that are like this every day. Our day trading room, man, it's fun watching those guys just zip in and out and do their thing. So the stuff that we do work, but I would make the argument that probably 80-90% of the people that are interested in Bitcoin, they do not have that kind of interest in the market. They're lawyers, they're doctors, they're teachers, they're nurses, they're policemen, they're whatever. They've got their own career. Maybe like Paul, you start out as a policeman and you're passive, but then Brian opens up so many damn rabbit holes, you go, fuck it, I'm going to be a trader full time. I don't know. That of course would be an absolute success story. But most people, in this world, you want to try and keep this investing thing as simple as possible. Don't overthink this. Since we know about the happening events, right? And we know that Bitcoin loves these cycles from happening event to happening event. They're incredibly consistent. Since we know about the better cycle, and we know that when the Fed is raising interest rates, and I might argue that it's not just the Fed, this is the market. And this is what kills me, is that most people in the public think it's the Federal Reserve Board in the States that's making the decision about interest rates. It's not. The market is speaking here. And, very clear illustration of this, this is what's called the TED spread. It used to be T-bills. Now, of course, the US government's bankrupt. So we have to use the banking consortium's guaranteed money. So call this the Rothschild spread now, I suppose. But Federal Reserve paper versus the money market, the Eurodollar market, this is basic. And don't confuse Eurodollars with Euro currency. It's a completely different concept. Of course, does that make it any easier for you all to understand this? No. So anyway, point being, this orange line, this is the market speaking, and the Fed cannot fall behind the curve. This is the relationship between the market and the Federal Reserve, or guaranteed government paper. If this number gets above 1.0, it means that the marketplace is losing confidence in that government guarantee. And you can see there is 1.0, and even right now, the relationship is at 1.05. So the market is charging higher and higher short-term interest rates, and the Fed is begrudgingly following along. They don't have any choice. If they let this relationship get out of hand, then the market's going to say, fuck you, Fed. You're worthless. I don't care if you say you're guaranteeing the market. I'm going to go and just buy my Eurodollar contracts because I have no confidence in you. So the Fed has no choice here. I hope you all understand that. And if anything, we almost need to do a lesson to all the woke idiots, and that Cortez doofus, and like the substitute drama teacher, try and educate him on the simple fact that it's the market that's speaking here, not a single individual. And if you think that you're bigger than the market, oh man, I've got some swampland in Florida I'd love to sell you. I've got a bridge or two that I'd love to sell you. Nobody is bigger than the market. The market is way bigger than any entity. In fact, recently, Jesus, Brian's on one hell of a tear here today. Recently, we had a situation there with the British pound, where the market is absolutely lost all confidence in the British government. And frankly speaking, I can understand why. It's a joke over there right now. The Bank of England had to come in and intervene to try and stop the slide. And I explicitly said, do not take that trade, right? People are like, oh, well, the Bank of England's coming in and stabilizing the market. I should go long. And I'm like, no, this is making lower highs and lower lows. Yes, the central bank bought the market a little bit at a time, but really the only reason why the central bank intervened when they did down here is because this thing was in absolute free fall. Now the trend is still down. Do not fight this trend, folks, or you're going to get your head handed to you. So there's a really good example where the market is much, much bigger than even the Bank of England. And I can absolutely unequivocally tell you, the market is much bigger than the US Federal Reserve Board. You think the US Federal Reserve Board is big? Trust me, with this market, it will dwarf the size of the Federal Reserve. And they cannot take the chance of losing control of the system. And that's basically this relationship above 1.0. And you can see every time it gets up there, oh, the Fed's got to quickly run in and raise interest rates. Gets back up there, Fed's got to run in there and raise interest rates. Gets back up there, Fed's got to run in there and raise interest rates. Well, you see this, it's breaking to new lows. There's no change in trend here. Remember I told you about the bond market. There's no W's here. You're going to step in front of that? You're crazy. Anyway, it's a good time for you guys to be alive. I tell you. And it's kind of funny because I used to joke with like guys that took the course in like 2015, 16, 17, saying, you know, at some point the shit is going to hit the fan. And we used to joke on the site about things like the TED spread. And I used to tell them, because keep in mind, the TED spread went absolutely insane through the US housing crisis, right? So here is the TED spread through the US housing crisis. And you can see there's the TED spread perking up above 1.0. And in this particular case, it was actually that the Fed was actually trying to lower interest rates fast as they could. Then they finally got in front of the situation here when they basically took interest rates to zero. So anyway, the point of the matter here is that I used to, you know, went back sort of in our happy-go-lucky days and everything's fine and, you know, not really that big of an issue with the spread, sitting at like 0.5 and stuff. And I would say to them, look, you don't want to be in the market when this thing is above 1.0. That's bad times in the market. So I would just simply say you want a really simple, and actually there's one TRIOGer out of the UK who's recently been on the site, Raf. And it took him a while, but he now, of course, understands that you do not want to be taking risk trades in the market when this chart looks like this. You are fighting against the Fed. And more importantly, the Fed is just playing catch up with the market. So why take a risk in the face of that? And in fact, I was just listening to this gentleman. He's kind of an interesting character. Actually, I don't know whether it'll show on this feed or not. Let's see. I go history. This guy is hilarious. He is so irreverent. He just doesn't give a fuck about anybody, but he's smart as a whip. I mean, look at his hairdo. Does he give a fuck? He's wearing a t-shirt while these clowns have to come to work and I've got to wear, look at me, I'm Mr. Important. Look how smart and howdy I am, right? I got to wear this suit. And then the little lady, and what's so funny is the little lady interviewer, you can totally tell she's completely smitten with this guy. Because she's as soon as she comes on camera, she's like, "Oh, hey, buddy, how's it going? Hey, you want to go get a coffee after the interview or something? You know, let's go have sex. And can I have your baby?" The whole damn thing. This chick, right? She's just in love with this guy. Anyway, this guy here, his conclusion out of this whole interview, and you can see it says September 5th there, right? His whole conclusion out of the interview is, don't be in the market, which is hilarious. Oh no, the camera died. Oh, I gotta go get a new battery. Hold on. I don't know. You guys enjoying the frivolity? I've been going off on a hell of a tangent today. All right, Chris, are you still there? Is anybody still there? Maybe I called you. Let's see. I'm gonna do that. Let's see if this will work. Sure, hope so. But it's incredible. And actually, somebody showed me there is a converter thing that I can buy that will allow this to be able to be plugged into the wall. So I gotta go. If anything, maybe if you could tell Julian about this, and TRI should order it. All right, you're awesome. Somebody PM'd me the thing, so I'll see if I can send it to you. Anyway, you guys enjoying the crazy ass rant? I'm sorry I'm going off on this tangent, but it is a fascinating time to be in the market, I'll tell you that much. All right. There we go. What's that? Yeah. I'm sure all the level oneers are like, "Oh, thanks, Brian. Yeah, you're making me feel real positive."
What happened, Chris?
Hey, there's Eddie. What's up, Eddie? All
I
right.
hope the show is not done. I think I restart my computer 2 times. The
Really?
maze behind it, I don't know what. Why, yeah.
Well, the good thing is it's recorded, so you can go back and watch it later if you need to. Okay, you know what I really should do is let's get on to these questions because I have no idea how long this is going to take to get through. And actually I wouldn't mind just seeing it. I mean, I go off on these crazy ass tangents and I don't even know what you guys are thinking. So where is the page? There's the YouTube page. What do you think, guys? Are you enjoying this conversation today? MM says, Brian, you're such a giver. Hooray, your battery is operational. I got 3 batteries and I just keep switching from the next to the next to the next. So Miguel says he was our driver in Sintra. I'm trying to remember that. You know what? Do you remember? I remember I was, because I had to drive the car that I rented. And you remember I pulled up and there was a whole bunch of TRIers. TGB Crypto, I remember he was walking across the road and I go, hey, Vaca, get on the road, you Vaca.
Was it possibly the taxi that you took up to the top of the hill from the bottom of the hill after the walk?
Oh, that could be it.
I didn't attend that. I walked up that hill, so you were
Short ride
chauffeured.
in a white car. Oh yeah. Okay, cool. Now I remember you. Yeah. All right, cool. Yep. Okay. So hey, I'm not as senile as I thought I was. Yeah. Okay, Miguel. Yeah. And remember, who was it? Was it you that we were just sitting on the forest and we knew that you were coming up the path? And I go, arms for an ex-leper, arms for it. And I had the hat out and I was begging for money. Was that you? We got to find that video somewhere. That was so funny. The look on the, if it was you, Miguel, the look on your face was priceless. That was great. Hey, well, I know this guy. That was Manuel. Oh, okay. Well, so is the other guy. Okay. Oh wow, look at what Brush Wama. What's Brush Wama got here? Brush Wama says, I've been waiting patiently for this. What the hell is this? XCAD network. Anybody no idea? Wow, look at that. Beautiful bottom. It looks like it already W'd. Huh, that looks good. What's the story? So whose idea was this? This is Brush Wama. Can you, and you're in level 1. Nice job, Brush Wama. Looks like you've learned this. Hopefully you can see, can you see the cute little W that came in right here? That is like the killer trade level right there. Especially off all these W's and all the indicators and stuff. Wow. But yeah, you're definitely thinking in the right direction. I like that. You know what I would do is I would draw a trend line off of that high and that high. And then ask, have we W'd out on the other side of that trend line? I don't think we have just yet. XCAD network. I don't know what the heck this thing is, but good eye there, Chief. I like what you're thinking. And that's on KuCoin. Is KuCoin now like all the sexy thing? Is that for real? XCAD. There it is. XCAD network versus Tether. Oh, it's on Shitterex too. Oh boy. Oh, it's on Polo. Oh, it's also DeFi-ish. I don't know what these guys do. But you're right. Look at that. It's good looking. So I think that the W actually came in right there, right? Now, you know, this is a really good analogy of waiting for W's on other sides of trend lines to confirm the trend. So you can see how we're basically right up against that line now. But we haven't W'd on the other side of this line. And notice how the moving averages are still a bit apart. So I think what the market would love to see is give us that pop, then come down and do a Wyckoff check, and your buy signal comes on any kind of bullish reversal right there. And what we used to do in cycles gone by is if this W confirms, and it looks like it's trying to, like the Dickens, then what I would do is, and actually I think that's exactly what this is. Notice this breakout here confirms this W, and you got a bunch of W's. So whatever the hell this idea is, you're onto something here, Slick. So notice we have the W. Notice we have the W. So if I do a range here and then I draw on things like reload zone, notice, look at this killer level right here. And this is Bruwama. This is what you're here to learn. Do you see this incredible bottom right down in here? That's the shit. That's what you're here to learn, to try and identify. So nice job. And we would, in times gone by, we would call this like the Jesse James setup, but it looks like it just missed. You could, I suppose, kind of cheating a little bit, but you could have, yeah, even then you can see it just missed the 78.6. I would have put my bid in right at that 78.6 and been so choked that I didn't get a fill there. But, and also too, check this out. So, notice the, I don't know whether you've ever heard me say this, if you're in the level 1 program, you will get to this later on when we do the fibs. You're right now eating your vegetables. But can you identify these situations? This is a reload zone within a reload zone. Oh, my sexy sex. So any kind of buys down in here, and again, that is our classic Jesse James level, that 78.6. So if you had your bid down in there, you'd look like a genius. So good eye. What I would say, and actually this is interesting. Remember we were talking about trend lines, breaks of trend lines, market structure on the other side of trend line. So you can clearly see that right here, right? So they broke it out, but you can't buy this. You can't touch that. If you are a bull, okay, fine, wait for the pullback, and then notice there is the W right there. Now, ironically enough, it's just about the same level here, but at least you now have market structure to work with. And if you did buy this, you'd say, okay, fine, I'm going to buy the W. I'll risk down to the bottom of the W, and I want to take at least partial profits at 2-to-1 risk reward. So that's right into there. So ding, 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 ding. You just got yourself a nice, cute little fill. I would probably even sell a whack of it, put my stop at scratch, and just see what the hell happens. Maybe this damn thing moons and you go and buy a Lambo with the rest. Who knows? So that's actually a really cool illustration of a lower time frame application of that trendline breakout setup. Now, what I would say here, and actually this is a really good example of trend channels. So we could draw a channel off of there to there. And the most important thing when you draw these channels is you have to drag the third point back off of whatever the most recent key pivot high or low is. Now, this could be arbitrary. You could say, okay, well, I'm going to draw it off of there, Brian. Okay, I can live with that. That is a key pivot, and you tell me. And the most important thing about all this is you just want to let the market validate what you're seeing. So is the market validating this channel? Boom, boom. Look at that. Boom, boom, boom. Interesting fight right there. Look how the market ran into resistance and pivoted right off of there. I'd say so. And you could say, well, okay, well, I'm just going to play around. Let's go off of that. The market respect that level as a channel. Notice that that's almost exactly double the size. So now the midpoint of the channel is picking up those same levels. And now notice that was pretty important. That sure looks like it was important. And lo and behold, look at what just happened here. And you see why did the market stop there? How do you explain that? Well, if you understand how to draw trend channels, it kind of makes sense. And what I would also say too, and this is where it gets kind of fun, and I was doing this in the lounge this morning, is you can just start overlaying channels. And what's fascinating, right, is we've just picked this arbitrary point in time and space. But if we start sort of cloning these studies and start overlaying them, do we get other references? Remember I'd said, I did this channel here, boom, boom, and then I drew it off of here. We could have drawn it off of here, but look what happens when you replicate this first channel and just, oh, well, look at that, son of a gun. Why the heck did that happen? And again, there is that reference to what we just saw. Anyway, there's kind of a fun crash course on how to draw price channels. Anyway, looks like you had a hell of a level right there, dude. A great call there. Now, what I would be really curious about is what's the fundamental story? How many are out? Where are the insiders long? What are they planning on doing with this? My hunch is that, and actually, the coolest thing, it's not really in the education program, but I suppose I ought to get off my ass and do this. And at some point I should get to the actual questions, But we could do like a foggy buggy, go there to there. And let's see where this tells us it wants to go. Boom. Hello. 2.618. Oh, look at that. Nice. So you can see 2.618. Basically, the market's saying it wants to go back up and revisit that high. Makes sense. It's also the top of value. And then 4669, all this is saying is I want to go up and revisit these highs right up in here. Not a big surprise. So I think you can make the argument fog and bumps are pretty good sort of gauges. We could also do a reload zone going from that low up to this high and then do reload zones. And there are some more levels to consider. Notice what a coincidence. 2.618 lines up with the 50% rule. And this is supposed to be like technical analysis 101. If you were in like kindergarten and you were in technical analysis kindergarten, the very first thing you learn is the 50% rule, and you learn M's and W's. So what do you think the odds are that this market wants to go back and trade to this level? I would say pretty damn good. So way to go. Nice pick down there. Yeah, in fact, just looking at this, you can see exactly you're supposed to be long from down here, take partial profits here. You want to move your stop to scratch, well, so be it. We were talking about lower time frame traders trading this, but what the hell? The higher time frame players, now we're off of like a 4-hour chart. Maybe we can even see this on the daily chart. Yeah, there it is. So you can see beautiful reload zone. Nice little W came in there too. Beautiful market structure. We draw market structure. Oh, what a coincidence. Foggy buggies. We actually call this a muak. You can see that this part of the profile really needs filling in. It's the 50% rule. If we think look left, that's a shout out to my Romanians. You'll notice that if we can clear through this level, next stop is right up into that level. So what a surprise. Yeah, that's a cool find you out there, Mr. Brew. Okay, let's go and look at these questions. Okay. Okay. We did this one. This is an interesting conversation. I want to come back and talk more about this, but maybe I'll do that tomorrow or the next day. This is an interesting conversation on PE. So. Brian, could you talk please about information risk versus price risk concept? All right, just in a nutshell. In fact, actually, we can even just look at this asset we were looking at. Where is that chart? BTC, ZQ, where'd it go? Is that it? Yeah, there it is. Okay. So let's say we'll go back in time. Like that, and we'll go like that, and we'll go like that. All right, so market's screaming down. We're trading near the bottom end of ranges, right? And some people might go, well, that's not a bad level to sort of consider buying. Do we have any sort of anecdotal information that the market has actually bottomed? Usually, especially now that we've done that, now we've broken through. Usually, these recent lows, so we're surging lower. Usually what ends up happening is the information that tells you that a market has transitioned, it sort of looks like a W. So if I wait until this comes in over here, I've got the information I need from the market to validate that, yes, this is now an uptrend and it's worth taking a shot at. But you notice I'm coming in a long, long way away from where the actual bottom on the asset is. So this would be a good example where if I have to wait for this confirmation that indeed the market is trending higher, then, and I always get this backwards. I am taking price risk, but I'm foregoing that price risk because I have information that helps me make a decision. I hope that makes sense. If, however, I believe that this is a bottom here because we're coming up against key historical support, I don't have any anecdotal information whatsoever that this is the bottom. And I just buy here because I think the price is cheap. Then what I'm doing now is I'm taking information risk. I'm thinking that I have a low price, but I don't have any confirmation that this thing is actually turned. And if I'm buying here, what I'm hoping is that it actually does something like that. And now the information risk guys, they're going to come in and they'll buy up here. And then the difference between me picking bottoms, price risk, versus waiting for information to come in and information risk, these guys are taking a much, much higher risk, relatively speaking. I hope that makes sense. I don't know whether, I always get the wording backwards on those things, which confuses people to all hell. But hopefully that made sense what I just said there. So, the price risk guys, they're going to come in and buy here. But, we have the power of hindsight. Let's see what actually happened over time. Was this a respectable area to come in and actually buy? Well, we can see price risk wise. Well, we came in pretty darn close to the bottom, eh? We didn't really have any anecdotal information that a bottom was actually in. We just were at the bottom end of the range and we're like, what the hell? We don't have information, but we got a pretty good price. Let's come in and buy. And on balance, that wasn't a terrible idea. The guys that are like, I need information to validate that this actually has bottomed. Well, they're going to buy up here. So now price risk guy, he's coming in at that level. Information risk guy, he's coming in at that level. This guy obviously is going to get paid a hell of a lot more than this guy, right? If we go up to here, just in simplest terms, if that was the target, then this guy, if he has to risk all the way down to the lows, up into just say there, that's a 1.5 risk reward. This guy here, because he's come down, if he takes the same amount of risk, we're just hypotheticalizing, he gets a 5-to-1 risk reward. So obviously, the price risk guy, he gets paid much, much more than the information risk guy. What do you think? Does that help answer that question? Anyone? Is the person who asked that question here? Who is that? That was Nick. Nick, did you get your question answered? Anyone? Anyway, let me know, Nick, whether you felt that was answered. Okay. Number 3, Brian just started level 2 and I was wondering if you were going to talk about scaling in and out of trades, especially as it relates to futures, or is that level 3 talk? Yeah, we talk about pyramiding in level 3. I really do not like new people to trading to pyramid trades, very dangerous. But we do talk about it in the level 3 program. In fact, actually, it should be this week or next week's topic in the level 3 program. Level 2, I consider it sort of like, it's really like level 1.5 in that it is nothing more than I wanted to give you a full look at the candy store. By the time we get to level 3, we actually start circling around because hopefully I've given you enough time after finishing the level 1, then completing the level 2, that you've had enough time to sort of get used, have you actually done the 100 paper trades that we're asking you to do in the level 1 program? Keep in mind that usually takes a very long time to do. And it's at the point in the level 3 program, week 2, we talk about your pro trader workbench. So I want to give you that whole level 2. You're further exploring the candy store. You're learning more about the structure of the industry, things like how the futures markets work and what is a commitment to traders, who are hedgers, how do they operate. Of course, we have a whole bunch of candy store information, volume profile, gaps, horizontal support and resistance, moving average, trend lines. And as well, of course, we have a very robust conversation about Mr. W.D. Gann and introducing you to him, his chaos. As well, in the level 2, we introduce you to algorithms and building scripts on TradingView to sort of algorithmize your trading. So I figure that by time we get to the level 3 program, you've had enough time to build out that sort of spreadsheet of your trade log, and you should have a pretty good idea about how things like the bot setup works, how things like Altanganator setups work. With the introduction of a whole bunch of new trading concepts in level 2, you can think about things like volume profile for trade location, gaps, moving averages, horizontal support and resistance, all of those various setups, Craig FU setups, all that kind of stuff. And it's only after that, and then when you come back for the level 3, I actually have, and I really like it, I have the level 3 instructor now actually inspect your pro trader workbench. And on the approval that you are actually doing what you're supposed to be doing, then we actually start opening up other rooms, harmonic trading room, day traders rooms, the options trading clubs, and a whole bunch of various different sort of new avenues start opening up. And one conversation that I'm comfortable having at that point with you guys is the idea of you pyramiding trades and having the market actually finance further trades. But to be honest with you, I don't really like people to do that a lot. As well, too, I do talk about how, in the day trader program and in the day trader room, ideally, I'm supposed to be putting on multiple contracts, and then I take contracts off as the trade ideas work. But since I've been back from Portugal, my trading just sucks horsecocks, which usually is what happens, unfortunately. You go and take a vacation, and then it takes like a month or 2 to get back into the swing of things. So I'm actually like kind of right now, I'm in the penalty box and I got to earn my way out of the penalty box before I can actually get back to that kind of high octane trading again. So I hope that answers your question. I do like, I'm not really, how do I say this? There's no right or wrong way. By all means, if you want to have the conversations of scaling in and out of trades, that is a conversation that I do typically have with the level 3ers and higher, and in the day trading room, and in the pro traders workbench, or in the TRI SOF room, and in the harmonics room, and stuff like that. We do talk about those kind of concepts a lot. So anyway, I hope that helps answer that question. All right. Good morning, Brian. Hopefully I get this date format right. Next show is 9th of October. Okay. Many of alts have been looking like that lately. Some strong FA coins. I'm thinking about FXS and CVX already had sweet green candles, as well as this STX DeFi coin. Can you please tell me what TL is right for you? Maybe both. I'm wondering, as we have 4th LJ on the first one, tend not to be patient enough. So maybe the second one is a more conservative option for the level 0 I am. Oh, okay. Well, first and foremost, most important thing here is we never take a trade off of base one reason. Never, 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 never. Ideally, I like the cadence to go trade location. So, ironically enough, on this chart, the fact that you are down against previous lows, you're at the bottom end of the trading range, I can start thinking trade location. I would also at this point like to zoom in and see what your indicators are suggesting. Do you have bullish divergences working? I would say that actually there's the primary trend line that you're kind of missing on this chart is that high to that high. And that's boom, 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 all the way up there. So what I find happens in these kind of scenarios, and what is this? This is stacks versus tether on Binance. There it is. So, yeah, on this one, every time you have a new market structure signal, that's basically telling you can draw a new trend line. So every single one of these, right? You can do there to there. That's a perfectly valid trend line. That high there. To that high there. Confirmed right there. Could you use this as a show me a W on the other side of this trend line and I will get a buy signal? Sure, perfectly fine. And ironically enough, there really hasn't been. I mean, there's this way up here, but that's awfully far away. But I would say there really hasn't been a W put in here yet. It's kind of a shame that there's that. Then you could do even this one here. Totally fine. Again, show me a W on the other side of this trend line. You can see this one's been really respected. So traded to there. Don't buy that. You're going to get yourself in trouble. Had to melt all the way back down. Came back again. Don't buy that. And look, it broke out. Do I buy this? I don't think so. Where's my W? And sure enough, came all the way back down. Still, oh, now we're back below the trend line. Got to get back above. Okay, can I have a W? Nope, no W. So you're still waiting on this trend line. And actually, ironically enough, I think I'd probably leave it at that. Let's see if this one almost looks a little bit lower. Yep, so there is that. That's a valid trend line because, well, no, it isn't. This is potential. So this has been confirmed. This has been confirmed. This one's still potential. We'll make this a dashed line. So that's floating out there. So it's support and resistance. I can totally respect that, but I wouldn't call this like an active trend line as the market's respecting it. I would say that we're at this point right here now. We could, since you are, and with this in mind, I do like this as resistance. I think that's perfectly valid. Now also remember too, like we can zoom in and out on time frame. So if we go like 2 days, do any of these levels disappear? No, they all look perfectly valid. Notice that this high a little bit higher, 639, 635. Yeah. So actually this should be off of that high there. All right. You could be like, okay, well, Brian, I don't really see anything happening here. Maybe we've got new trend lines working, right? So we can do this one. In fact, actually, this one just fired. So actually, let's do that one first. We go there to there. That's a valid trend line. This has confirmed by breaking through here. Put that like that. What this means here now is that this is not going to be quote unquote trending higher until we actually get a W on the other side of that line. That's a major resistance line now. So then I would say, okay, well, you're watching very closely this market structure. Boom, boom, boom. That just confirmed. So that's a valid trend line. And notice this is what I think's at play right now. This is resistance. Notice how that's the top of value. And if we did fibs going from here back up to here, that's probably in a nice reload zone. Well, right up in there. Yep. 78.6. You know how much Brian loves his 78.6s. Also, too, you'd probably notice that this is going to look kind of like an M top there. Probably a lot of people that they bought on this spike up here. And if we can get any kind of rally back into this area, that they won't have to sleep on the couch anymore. They'll get off, they'll get their money back, and the wife will talk to them again. So what that means is, you know, you have this trend line here, 1, 2, 3, perfectly valid. If I can get a W on the other side of this over here, right, some sort of W over here, then this trend line being broken means that that's a buy signal. Also notice too, remember we had this original trend line. What a coincidence. That's also in this area. So what this means to me in the short term is this is a hell of a traffic area through that. You really want to see the market clear through that and then give us a W on the other side. And it probably is going to paint that trade window. And then once we get up to here, you'll probably run into resistance. The noobs, of course, they will be buying up here. That's dangerous. If this really is a bull, it will punch through here. It will put in market structure, and then it'll give you your buy signal. Kind of like we were looking at that earlier. Remember, there was a name that punched up through the trend line, then it had to back off, then it put in a W, and that was the buy signal. So that's what I would be thinking going forward. I don't know. What do you think, guys? Does that make any sense, what I just said there? What do you think, Eddie? Sebia? He probably fell asleep. Chris? Anyone? All right. Hopefully that helped you what I just drew out there. The key here really is market structure. The market did go through this low, so that technically is a valid trend line. I really like this one because you got 1, 2, 3, 4, 5, 6. I mean, that's awesome. But I might argue it makes sense why this market stalled against here, because that is valid trend line as well. I do not like this. This is asking for trouble, what you're just doing right there. I'm going to buy there and I'm going to risk there. And I'm expecting the market to get up above there and break out. That's asking for trouble. I don't like that. And really, to be honest with you, I don't even really like this as a W on the other side of this trend line. That doesn't look like a W to me. That looks like down, up, and we still have to go down and test that low and then turn back up. If anything, what I'd want is sneak through this trend line, then give me a W over here, and then we got something to work with. Okay, regarding CVX, I already sold my bag up here. Can you check the chart, please? I guess I am looking for L Tanganator, bought if I want a position badly, and a setup appears. VPVR makes me feel like it wants to retest lows. Yeah, I don't know whether I would draw this trend line the way you have here. I think you go there to there, and then you go there to there. And what's interesting is, what's this, CVX? Oops. Okay, dyslexia for the win. Yeah, I guess this one. Actually, this is an interesting one. You've got actually some conflicting trend lines here. I always like that. Whoever it is, you are finding assets that are right down at the bottom end of the range, so that's a good sign. So you got that bad boy. If we get an M on the other side of this trend line, then it means whatever it was that was sort of bullish about this is gone. And one thing that bothers me about this is if you go lines, boom, hey, where did my W go? This low looks like it's lower, right? 360, 362. Yeah, so that's actually a bit of a trap. So, and a little bit of a suspect bottom there. Then I think the trend lines that you drew, there was this one. And I think that's sort of what's dominating right now. Could you make the argument that, like if we go, actually it's 2-day. Let's go back to a daily. Let's see if that makes any difference. There we go. Yeah. Okay, so boom, boom, boom. If I get an M on the other side of this trend line, that's trouble. So notice we went down, nope. Down, any M's, nope. Nope. Keeps making higher highs. Then fails, still an M, nope, no M. Right? Oh, hell, there's a W, son of a bitch. So ironically enough, yes, we've broken this trend line, but there's no sell signal there yet, generated yet. Conversely, on the buy side, like I said, this is the market structure that I would use to identify trend. But also too, there's also that one there. And this also probably lines up. This is kind of a fun concept. Sometimes what I'll see is, and I've seen this over my career, is sometimes technicians won't use this high. They'll use whatever the swing high was before that ultimate high to draw their trends. But for simplicity, let's keep it like this. So what this says to me is, okay, break this trend line to the upside. Now give me a W. Is there any W here? Looks like we made a lower low right there. So no, no, no. Oh boy, no. Oh, hello. And sure enough, I think your W is right there. So down, up, a little bit higher, down, up, down, breakout. So I think if there was a trade off of this, my impression is that that's the trade right there. So then that means that to justify it, you really would like to see at least a 2-to-1 risk reward. So that's there to there. And do I get, where is 2-to-1? So 2-to-1 is basically a rally into, oh, come on, you. Well, anyway, roughly into there. Which I kind of like, right? Because you can see that all that's going to do is we're just asking for a test of this trend line. And, what probably ends up happening is we probably end up banging up against that trend line. This is not a buy signal here because we might just work our way back down this trend line on the other side of it. You've waited for your W on the other side of this trend line. You've got your 2-to-1, and you are supposed to be taking profits right into that event, not buying. So I hope that's that kind of helps you see that. And I kind of like that. That makes sense. Nice 2-to-1 risk reward. You blow out half of the position, throw your stop now on the remaining. You put your stop basically at scratch and just live with the results. If this thing just doesn't come back, then, and you go and break out through here, then you look like a trading god and all the girls are throwing their panties at you, right? Isn't that what we all want? Right? And interestingly enough, you can kind of see the future. So if this thing does hold, good old reload zones, there you go, 61.8 lines up with 4669. I get the impression that if this thing's for real, $2.618 against that trend line makes perfect sense. So that would actually be sort of your next stopping point, would be right into that area, which also makes sense too, because you notice that's horizontal support and resistance. So that is a huge level right there. So, and I love this. This is, if you can get to this point as a technician and you can understand this concept, it makes your life so much easier. If you want something to learn today, write this down. What you're looking for is confluence. Can I spell the word? Confluence. What time is it? Oh shit, I gotta get going. This is the magic word. right, is this idea of confluence. Can you see that I have these chumps that are all sleeping on the couch, right? We always say wicks and tails like to be eaten. You can see these guys. They're sleeping on the couch. They bought in here. The market's just absolute collapsed. They're just praying to God that they can somehow get the market back to here and just sort of make everything right at home again. Horizontal support and resistance, this concept, ironically enough, if you're a bear, you're actually shorting that level. That's market structure. That's TA 101, the new M. So there'll be a lot of people that will say, like, as long as the market's below this level, it's a bear. If it crosses back above this level, then it's actually going back in to test the top end of the range. So just get me the hell out if we break this level. And notice 2.618, good old Feigenbaum constant. And right, where trend lines, are we supposed to buy at that trend line, or is that maybe a trap where sadly all the public comes in and buys, and then they have to watch the damn market work its way back down on the other side of it? That, my friends, is what they call confluence of levels. I can think of four completely different concepts that all paint this level as a target. So that's kind of cool. Anyway, that's an added bonus. It's not really part of the question. Having said that, I do like this little setup that just came in down here. The cool part about this, right, is you can say, well, Brian, your level 1 course said I'm only allowed to buy in reload zones. That's that L Tangonator setup. And oh, gee whiz, look at that. Do you think that's an accident? I don't. Could you call this confluence of reasons? I've got trade location. What do you think the odds are we actually have maybe bullish momentum divergences through here? Oh, what a coincidence. And whenever I ask that question, invariably, you know what the answer is going to be. Well, you can see MACD histogram, the lows in the MACD histogram, higher than this low, but price itself is lower. So you can say at this point, boom, MACD divergence. You can see we have beautiful, even just tight. You can see these are all lower lows down in here. And you can see that like things are RSI, all making higher lows. That's divergence. And of course, Brian built this indicator to try and help me avoid selling oversold markets and buying overbought markets. Willie is officially stupid. And if you're in the level 1 course, you'll learn about this in probably about a month or two down the road. But in essence, that's giving me the green light that I can actually seriously think about buying. So put it all together, I don't have a problem with that trade whatsoever. Perfectly fine. Anyway, hopefully that helps. And actually, these are some pretty good ideas. Paul, make note of this. We should look at these on Wednesday. All right, on 4 hour for continuation, it needs to accept top of value with a nice W up here, right? Yeah, that looks dangerous. But look at your momentum indicators. Do you see how volume is not moving to new highs here? That looks dangerous. That's a volume divergence right there, my friend. Be careful. This looks like this whole area in here needs to be filled back in. So no, I would say that that's very dangerous coming in on the buy side there. What I would do with this is this maybe would be a bot. And that means I need to see 3 higher lows. So I want to see a higher low after a higher low after a higher low, which tells me that, all right, this thing is serious. So what do we see here? So now I'm zooming in on your lower time frame chart. And I see a higher low, higher low, higher high. Okay, that's fine. Uh-oh, what letter of the alphabet is that? I do not like to see that. So that's concerning. So you're already starting to see your first signs of trouble. Now the question is this on a bearish momentum divergence? I bet it is. Yeah, you can see, look at that MACD histogram high there. These MACD histogram highs, they are lower than that high, but price is higher. Uh-oh. Look at RSI. RSI went into divergence way back here. So these highs, they're just a shadow. And look at that, lower high, lower high, lower high. Uh-oh, that's got trouble written all over it. So there is anecdotal evidence, and there's that volume divergence. You can see price is making a higher high. Volume is not making a higher high. Uh-oh. So careful. All right. Hope you guys enjoyed that on that CVX, right? Going all the way down to my Tesla 27-minute charts. All right. Let's keep moving forward. Oh my goodness. Oh God. How much work? Yeah. Okay. All right. You really are the best teacher a market participant could ask for. Oh, fucking hey, man. You know what? I think we got to bold that. Joshua, are you here? Did you see this? Joshy? I think we better just everybody. You got to say that 10 times before the end of the show. That's cool. Just got to worry about the damn battery on the camera. Actually, every video, I don't know whether you noticed that I gave my spat. I don't know, what do you call that when you stick your tongue out at somebody? Anyway, I did that on the video the other day, so I did it here. Every video, I'm gonna try and do that. All right, I can't stand any crypto channels anymore. All right, well, you know, and I hate to say it, but that's actually a big function of what I do. Is if you actually get to the point where you understand the conversation that I'm trying to have with you, you can't talk to anybody. You can't even fucking talk to people on Wall Street because you just look at them and you go, you're a mindless fucking drone. You're a used car salesman. So it's not just the crypto channels. And of course, you try and talk to like the family at Thanksgiving dinner about finances, and you're just like, oh my God, are these people really this stupid? So if I have my way with you, you're screwed. Oh well. I guess your streams need more sexy ladies to bring viewers. I guess so. I don't, frankly speaking, I don't quite understand why we have such low viewership, to be honest with you. I would have thought, I've been doing this now for 8 fucking years, and the message has never changed. Chris, in the entire time that you've known me, has the message ever changed?
Message hasn't changed one bit.
Eddie, has the message ever changed? He's out playing with his vodkas. Paul, has the message ever changed? Oh, I just see there's just a few people here in the hangout. That's why I'm asking them. Now these guys are all shy. Well, that's what you get for calling people out. Who else is in here? Mike! I don't know how long you've known me. Anyway, point here is nothing ever changes. It's always exactly the same. That's probably half of the reason why I'm not so popular, is that, you know, at the top of markets, I'm going to tell you to put your money away, you stupid idiots. Why are you buying tops of markets? And this is the most frustrating part about playing this game correctly, is this is the only business, like I said right here, and I've been saying the same sentence statement my entire career. This is the only business that when stuff goes on sale, nobody wants to buy, and it makes no sense to me at all. But I would make the argument that Bitcoin is now basically 70% off, and I'm not going to go into the business of calling bottoms, but what I'm going to say is, if you people want to, quote unquote, make money from trading, you have to force yourself to come in on the buy side at the bottom ends of ranges. That's just the way the game works. Drives you crazy. So anyway, I am not asking you to grow a pair of tits. Well, I've already got a couple tits. Oh, Jesus, I've already grown them. They're big. So anyway, all right, thanks. Appreciate the feedback. Mike says, last week in our level 3 group class, we went through your daily checklist, which you used for your workbench back in your prop trading days. We weren't sure of all the abbreviations you used. Can you please fill in what they stand for? MDiv, yeah, momentum divergence, yep. V levels, that would be your value levels, but value high, value low. 3-bar reversal, that's your fractal. So, and yeah, I used to every trade that I took, I had to have a 3-minute 3-bar fractal or a 9-minute buy signal. So hopefully that helps. Also, you mentioned use EMA checks, Holy Grail, for example. What was the Holy Grail? Oh, well, actually, you can find that. It should be fairly easy to find. I'm not sure. I don't know whether it would be on Twitter or not, but that's Linda Bradford Ratchkey. And so if we go LBR and then Holy Grail, and really all it is you want the market, and I don't know what the hell this crap is. You want the market to validate that it's trending. And so you use the ADX. As soon as the ADX reading, you could also call it the DMI. Some people call it the DMI, some call it the ADX. Average directional trend, as soon as it's above, I think it's like 40. Yeah, here it is right here. The Holy Grails trading setup that makes use of the ADX. Some people use it DMI. If it's above a reading of 30 or 40, I can't remember the number just off the top of my head, then any tags of the 50 period moving average are buy signals, right? There you just buy a tag of the moving average. So that's what the check of this is. And by all means, this was developed by Linda Bradford Ratchkey. There she is, Linda Bradford Ratchkey. I don't know who these guys are. I just Google search. So they're saying 14 period ADX is above 30. All right, so 30 is the magic number, right? And they're using a 20 period simple moving average. I always used to use a 50 period. So anyway, so there you go. So really all the Holy Grail is give me a signal that the market's trending, and then just a tag of a moving average is basically a trade level. It's just that simple. It's pretty simple model. And I'm not taking credit for it. That's LBR's work. I used to talk with her. She's a really nice lady. I always liked her. Right. Mike says some more questions which were left open in the group class. Could you please run through an example of opening range trade? Mike, if you've had your Pro Trader Workbench confirmed by Zach, and actually Joe Z is now Zach's assistant. So I think Joe Z, you're going to have to get to learn to validate whether these guys have completed that task or not. Then just get your butt into the day trader room. And, Chris, ironically enough, he's constantly trading the opening range trade. I don't personally like the opening range trade. I mean, I used to do it when I was prop trading, because it was kind of like shooting blanks in the dark. You didn't know whether it was going to work or not. If it worked, yeah, you could be handed a big mitt full of money to start your day, and then you got a real power play to trade from. But I don't like anxiety. I mean, if anything, Brian's an ENFJ. So that means Brian's got to see trade location. Brian's got to see indicator confirmation. Brian's got to see market structure. Brian's got to get fucking word from the other side that, yes, this is the bottom. And even then, I'm going to still expect to be wrong 30, 40% of the time. So yes, I used to trade the opening range trade. If you do want to practice it, just come on into the day trader room. Get vetted by Zach and Josie that you are ready for the day trader room. Could you please run through an ERG, same sort of thing? And really, ERT was just nothing more than think of Craig's SFU setup, or Sebastian SFU. Craig SFU, where extreme range, right? Just simply we've broken through the previous historical high or low. So, just a really simple example of an extreme range trade would be something like the SFU setup that we have in the library. And you remember in this past week's quiz, I guess maybe that was the level 2ers. They got kind of tripped up on this because the quiz question was wrong. And so it really fucked them over. But this would be an extreme range trade. So market doesn't stall at the reload zone. In fact, we go right up and they clean out the previous day's highs and, take it above value here. And it's a total setup. This is the way in Nebraska. He used to love to trade this way. And we have one gentleman who in the day trader room, Craig, who does very, very well trading this setup. It's his own version of it, but works really, really well. So that would be your extreme range trade kind of setup. And then OTE, back when I was at the prop firm, there was this guy running around the internet, and he happened to have on videos and stuff. I think he calls himself the inner circle trader or something like that. And he used this term to describe 61.8 to 78.6 OTE, optimal trade entry, he called it. When I was doing my trading plan at Top Step and I was funded with them, that's what we all sort of called it in the trading room together. These guys that I was working with, they really liked this gentleman's work. I saw him do a few things that really bothered me immensely. And this is like, 10 years ago, I think. And so as a result, I wanted to distance myself from this gentleman. And at the same time too, how do you say this? Something like a 61.8 fib, I work with prop traders, in the course we call it Mountain Man. Of course, everybody probably on the internet knows Mountain Man as 61.8 fib, which is kind of ironic because I'm sure Brandon never really anticipated that happening. And I've worked with 78.6. Of course, it's a super important fib level for a lot of harmonic patterns. So I also didn't really like what optimal trade entry implied, because I don't think it works that way. I personally think the optimal trade is lots of indications of location, lots of indications of momentum divergence, and lots of indication of price structure to help you frame your trade. That would be optimal. The concept that he used, and you see this in the reference because this was sort of like my prop trading days when I was working with Top Step. I used this reference in my trading plan that I submitted to them. In years afterward, I simply abandoned that gentleman's approach, and I wanted, if I was going to teach this in my own education programs, I thought it was only fair that I actually give it my own branding and try. And the reason why I came up with the concept reload zone is because I think it better illustrates what the location tool is trying to do. It's actually trying to illustrate where institutional players reload previous positions that they sold at the top of the end of the market or the bottom end of the market. So I think probably like 2013, even maybe 2014, I adopted the concept called RLZ, and I've been using that ever since. It's ironic that material, the only reason why I included it in the course material is I just wanted to show you I was a funded trader. I basically had, Top Step's ear. Hell, I had half a fucking CME's ear at one point. And this was exactly what I did. So basically, Brian, open book, I just shared with you my trading plans from those days. Do I use this optimal trade entry concept anymore? No. And frankly speaking, I think that's a bit misleading, this OTE concept. So that's why I don't use it. And frankly speaking, like I saw the gentleman do things like wave guns around in people's faces. And I was like, I have to distance myself from these people. You all know how I act on the internet and, my teachings and stuff like that. If anything, I'm a conservative, boring guy compared to some of these crazy ass kids on the internet. So anyway, and actually this is a fun little trick. This 70.5% number, if I ever see anybody on the internet ever use this number, then I know that they're actually a student of mine and nobody else. Because this is actually a mathematical error, which is kind of ironic. This is supposed to be the midpoint between 61.8 and 78.6. So 0.8, 0.6, there's no way a midpoint is going to be 0.5 like that. So in a weird sort of way, if I ever see anybody make reference to 70.5, I know specifically they're a student of mine, or they've learned this concept from somebody who was a student of mine and they didn't even realize that this is actually technically a mathematical error. So that's kind of funny how that's in there. The number that we do want to follow, by the way, I think is 70.2. So, and the easiest way for you to do that is just get a calculator. So anyway, all right. So probably best to start winding this up pretty shortly. I'll see if I can just bang through this question. If I can't, then we'll leave it. And if anything, I got to get out there because it takes me about a half hour, 45 minutes to get to Liam. So, okay. So I did not go through, I did not get to work through them yet. I did not get to work through. Yeah. All right. Maybe I work through them myself first and can get back to you about them another time. But if you have any feedback today, tomorrow on the BCSDB shows regarding these daily trade setups, yes, please share. Thank you for TRI and all cheers. And Mike, you're in the level 3 program. So what I would suggest you do, Mike, if you could, is get your Pro Trader workbench all tickety-boo, then get your butt into the day trader room, and we can sit here and talk these setups all day long. Okay. All right. Last question here. 5. Hi, Brian. If time permits, can you please give us a high-level overview on how corporate interest rates are determined? If corporate rates are free market rates, why do we even need the Fed? Your explanation of the Fed spread is brilliant, and I do not see anyone else talking about it. Yeah, well, ironically enough, it used to be called the TED spread. So if you ever actually get to, like, you're talking to some people that are smart in the market, say, can you please do a TED spread analysis? And that is your tell as to whether somebody actually has more than about 10 years experience in the market. Because like I said, before 2008, there was no such thing as a Fed spread. There was really Fed fund futures. Nobody ever used that. It was only made up because technically the United States of America went bankrupt. And they had to have the Fed, which is nothing more than a consortium of all these banks and a cartel. I mean, it's so ironic that Americans get all upset at the concept of OPEC when the US Federal Reserve is like OPEC on steroids. So how ironic, eh? But nobody ever talks about that. Shh. Remember, we're not allowed to talk about money. And in our high school and university education programs, they spend ridiculous amounts of time trying to explain away things like inflation, when really all you got to do is listen to Milton Friedman for about a half an hour and you'll understand exactly how inflation is created. It's laughable how simple it is. So, but Joey Diamond doesn't want the public under. Joey Diamond called Bitcoin a fraud. I mean, how on earth do you go on national television and call Bitcoin a fraud? I mean, that, like if you called any individual a fraud, that would be, unless you actually had proof that they were lying, that would be grounds for a civil lawsuit. And that would be grounds for defamation of character. I remember one old Canadian prime minister, a newer prime minister, called Mr. Mulroney a fraud. And Mr. Mulroney slapped the government of Canada with a $90 million lawsuit that he won. They actually had to settle out of court because he was right. You can't just go throwing around the word like fraud and not having implications about it. And he publicly came out and called Bitcoin a lie on public American television when he was wearing his silly little sling. Do you guys remember that? He looked like a total idiot. But it was totally planned. And ironically enough, shortly thereafter, good old cryptoverse, Twitterverse, whatever, pointed out all of the times JP Morgan was not only accused of being fraudulent, but was actually convicted of fraudulent activity. Now, who is the fraud here in our society? So that's the background that we're dealing with here, folks. Does it not surprise you why nobody in the public talks about the Fed spread and nobody talks about actually how the short-term interest rate market works? It's not in the banksters' best interest to have the public understand this. And it's actually a bit frustrating, to be honest with you, but hey, that's the way our society is. Now, the issue here at the end of the day is everything comes down to money, right? The almighty aller. If you know what that reference to is, then Brian will be a fan of you. But this is one of my favorite websites to go to just get a completely non-banker bias sort of look at the futures markets. Here is our interest rate markets, and you can see there's Fed funds, 30-year bonds, 2-year notes, 5-year notes, 10-year notes. You don't even see their T-bills, treasury bills. It's not even on here anymore. I mean, that's how bankrupt the U.S. is. They are no longer the lender of last resort. The lender of last resort now is this consortium of banks. Cartel, that's probably a better word. But keep in mind, do the Feds want to lend money? Does this cartel of banks, do they want to lend money to Joe Sixpack? How about GMAC when they do all their car financing? What market do they go to? Do they have access to Fed funds? Absolutely not. In fact, they call it the discount window. And there's only few people, but maybe 100 different players in the marketplace that are actually allowed to borrow money from the Fed funds futures, right? Let's rephrase it. They're allowed to borrow from the Fed. There's not that many people that are allowed to do that. Remember, this is a, I mean, you talk about old boys club. This is about as old boys gets, right? It's the Rothschilds. It's the Joey Diamonds. It's all the clowns at Goldman Sachs. Why did not a single fucking Goldman Sachs executive get sent to jail in 2008 when it was proven that the day that they floated a lot of these bad sort of CDO, collateralized debt obligations, they were actually taking the short side of the trade at exactly the moment that they were bringing it to market? That's called conflict of interest, people. That's against the law. Did anybody get held account? Who's a fraud here? Joey? It's sickening how brutally corrupt all this is. So, where do the rest of us go? Ford, have any of you ever bought a Ford car on credit? Or a General Motors car, or an Audi, or a BMW, or a Mercedes, or Toyota, or whatever? I mean, all those people, where do those short-term interest rate people go? They go to the Eurodollar market. Now, Let's just try and put our head around how big this market is. Keep in mind, we're talking serious money here. This is open interest. Do you see that this is 156,000 contracts? And each contract is for $1 million. That's not even the biggest contract. The biggest contract you can see here is 1.4 million contracts at $1 million a piece. How much money is that? Somebody want to do me a favor? Take all of these numbers and add them together. 400, 800, what, 1.8, 2.5, 3.3, 4.3, 4.32, 5.7, let's call it 5.8, 5.9, 6.05. So 6.5 million contracts at $1 million a piece. How much money is that? Do you have that kind of money in your back pocket? Does the U.S. Federal Reserve have that much money in their pocket? No. This is a lot of money. It's literally the entire, this is where they say things like Deutsche Bank is screwed because of their derivatives exposure. Keep in mind, every single contract open interest, there's a buyer and a seller. So somebody's got to be on one side of the contract and somebody's got to be on the other side. That's a lot of fucking money, right? Thank you, Mr. BT. $6.5 trillion. Now, if there was a margin call for $6.5 trillion and the U.S. Federal Reserve had to step up, do you think they have that kind of money? I don't think so. So this is why the euro dollar market is so damn big. It is the corporate interest rate market. Hopefully that helps explain that question. Okay. I hope that helps. Let me know. And by all means, if there were any of these questions that I did ask, I love this. You got to get a screenshot of that, please, somebody. But if there were any questions that were asked that I didn't answer to your full satisfaction, then let's attack this tomorrow morning in the broiler chicken or in the daily brief. All right. Hope you guys enjoyed that. Got to head off to Liam. So if everybody could give me a big PMA karmic wave. Liam, please be in a good mood today. Brian, try and be his best dad and best sort of special needs support person you can possibly be. It helps a lot when you guys do that. I really do think it helps a lot. So please, please, please send those karmic best wishes. I hope I've fulfilled some of your request of me, Jojo. I think we're making a small positive difference in this world. I won't go into the big shill for the website. I mean, I've told you guys repeatedly what a great value I think this website is and all the tools and stuff that we have to help you make better trading decisions. I think our education program is second to none. Unfortunately, you've missed the recent intakes. The next intake will be early January. Of course, by all means, we'll have lots of promotion and marketing coming into this November cyber, whatever it's called, event. Also, too, I would like to get everybody up to speed on using the dashboard and getting the maximum value out of it. And of course, encouraging you to consider subscribing to the site so you can have your own private workbench. So PMA for the win. I really feel like we're making a positive difference in this world. I hope my rant here today was met well. By all means, I've told everybody this before, the absolute best thing you can possibly do for either myself or Liam or TRI or any of our TRI family. Geez, I think we have a staff of about 20 people now. just tell a friend. You think this was good? Tell a friend. Go watch all the free content on YouTube that we offer. Tell a friend. Hey, maybe check out the 30-day trial that these guys give you to see what their community is like. Ask a friend about people that have actually taken the education program. Do you want to set up a successful small business of trading? That's what we teach. Like I said, I don't really see any other alternatives out there that actually hold a candle to what it is that we do teach. So PMA for the win. Thank you so much for your indulgence. Have yourselves an awesome rest of your day. The only thing left to say is a big bye for now.